Hey everybody, we have brought Tony Greer back from TG Macro. It's glad to have Tony back on, man. It's always good. I've been a subscriber of Tony's for years, just reading his letter all the time. It's very, for me, I think that you really have to find somebody that kind of has your time frame in mind when you're looking for somebody to subscribe to. And Tony's always been kind of that dude. He's always been on point on the calling the commodities plays, when to get in and out. Just looking at the market in general, I've always liked Tony's outlook. So, how are you doing today, Tony?
I'm good, Jason. Thanks for having me on, man.
Of course, man. You know, I really like the other day I was reading your letter and it was talking about the waterfall playbook, and I thought about bringing that up here not only because it was really on point, like yeah, cool, like you call the bottom, it's hard to do, but I like the way that you put it in your own words. Like, what is the waterfall playbook that you were looking at this last week?
So, during
Oh, I got the letter right here.
oh, go ahead, go ahead. Do you want to get something out first?
Oh no, I said if you need help, I got the letter right here.
Oh no, I kind of have the playbook kind of etched to my brain at this point, Jason.
Nice.
It's like I'm generally a bull market trader, and I can recognize when the S&P is going on a bull run. Whether it's a breakout or something technical, or you just see an area of ground that the S&P can cover to the upside. I've gotten good at recognizing that because I'm a bull market trader.
Mm.
So what I've trained myself to do, rather than being, I started off as a bull market momentum maniac that loved buying the highs every time I could, you know um and that was very much how I traded as a younger trader. And sometimes it worked, sometimes you get run over. But I've decided, since I started forming my own system of trading and way of doing things, my process, I would say
Hmm.
that I would sort of wait for the right moments to deploy capital on the long side. And I finally figured out that if I, basically started with the premise of let the S&P back off, right? Like let the market back off, and don't put new longs on until you get that moment. And so playing for a waterfall, I have kind of a checklist that I go down. When the S&P looks susceptible, the times when it's kind of teetering over a moving average and looks like it can kind of just slide down to the next one. So you kind of look for those pullbacks and say, okay, if I want to put money to work during this pullback, let's wait for the pullback. So let's look for, 3 or 4 consecutive red days,
Hmm.
right? Let's look for at least some, reasonable percentage of a VIX rally,
Hmm.
right? Like a 25% VIX rally or something like that, from 15 to 18 or 16 to 20 or something like that. Um, a string of low tick index extremes greater. I use like minus 1500, because those are the days when it seems like there's real heavy selling. So if you get a couple of tick index prints along with those negative days, then at least you can look at the chart and say, okay, there's been selling, there's been portfolio turnover, the S&P is lower, and if I want to look for things to buy to trade out of this is a good time to do that.
Nice.
So there's a few other components. Watching the curve is really, really important and difficult,
Mm. Yes.
right? It's hard enough trying to have a view in the bond market, let alone have a view on, twos versus tens, and kind of understanding what that does, and when the rate of change in twos versus tens, what that does to the markets and things like that. So to make a long story short, we kind of on this pullback, we kind of got that recipe. Oh, in addition to that, I look for the S&P to kind of fall into a support zone
Hmm.
where at least there's a moving average below that I can put a stop loss. So we've got to be now between 5 or 10%
Right.
of a moving average, right, to be able to lean on that as a short. And so what happened on this pullback is the S&P pulled back almost exactly to the 100-day moving average on the lows. We had the chance for that bottoming formation of a red to green day, right? Where we see a kind of exhaustion at the beginning of the day, selling in the first couple of hours, and then the selling is relieved and you get a bounce out of there.
Yes.
And so when we got the check mark, we kind of checked all the boxes all the way down when we got to the bottom of the waterfall, right? That was the time to get long, right? On that, what day was it?
I think you put that out on Monday, August 21st. So Monday.
Yeah, exactly. So Monday was the day that we got let's see. Well, we were looking for that red to green reversal that we got on the 18th, right?
Mm-hmm.
I know I wrote about it, right when that was happening.
Yep, the red to green reversal. Yep.
Yeah. And so it was like, okay, we got the red to green day. So now it's time to deploy some capital, right? We got the VIX pop to 19. We got 4 tick index lows greater than 1500 on the last 4 days of the week last week, which were all red days, right? We got the move into support that we can put our stop on the other side of the moving average. We look ahead on the calendar now, and we've got this week where we've got NVIDIA earnings and Jackson Hole. So you look at the tape and you're like, can they really destroy the tape even further with NVIDIA earnings and Jackson Hole coming up? Like, I don't think so.
Yep.
So that was a little bit of kind of the card, that was that hand of the poker game, right? That we just played there was sort of the hand of, okay, here comes the waterfall. We bought the dip. Okay, we've traded out of it now. We traded up to the right back up to the 50-day moving average, where I tweeted this morning. It would be interesting to see if NVIDIA forms a high here and backs off right while the S&P tests the 50-day on a bounce, and then we could see the tape back off again. So that's kind of the next hand in the poker game, since I've kind of sold some of the length that I bought, with that red to green day. And it's hard when, it's hard on the 18th when you get that close that's kind of unchanged, and you come in next day and you get a little bit of a rally, and you're still kind of at the bottom of the plunge pool.
Yep.
As we say, and you don't really have you're not really oriented properly, and you don't have that much confidence that the market's going to grind its way out of there.
Yeah.
There's still fits of selling that come in and to shake your confidence. But you kind of have to put the noise cancellation blinders on at that point and say, okay, my stop is below yesterday's low where we had that red to green day, and I'm not looking. It's like kind of like, if you want to get me stopped out, come and get me down there. Otherwise, you're going to have to trade out of this yourself.
Yes.
And so kind of you just let the tape breathe a little bit. And so that's kind of what we had. And now, I'm really kind of neutral now. It feels to me like NVIDIA can back off if it trades into sort of this week's range, back into this week's range, which is a high of 480, 170. We just closed the gap to that range now, and it held and bounced $10 already. So that might have been it on the dip.
Yeah.
And right now there's so many insane variables in the market, Jason, that it's so hard to have your bearings. So that's why I kind of force myself in my process to wait until a moment like that, be able to deploy capital and not say, okay, I'm bullish, so let's buy. No, I'm bullish, so let's wait for the right time and place to buy.
Yes.
So that's kind of what I'm been working on.
No, I love that. And what we do here is I'm trying to show traders trading as opposed to what they think trading is, or what we think trading is, or whatever. And that's an important thing to say. Like you said, like, I'm bullish, so what's the point in buying just as we're hitting highs? Like, wait for this playbook to kind of play out, or wait, like, I love for me, like, I know you, and this, everybody who's been trading for a while knows this, 4 days down in the S&P is usually a sign there's a bounce coming, just generally, especially 4 days down, like now we're really seeing it. And then you see a red to green day, that's a jump in. But I think what I've noticed is what everybody kind of does at those times is, oh my God, it's a weekend. This has been a tough week. You start to get in your emotions. Then you go, next week, Jackson Hole. Next week, the video is so overbought, or whatever you want to call it at this point. The rally's out of control, and they don't want to touch any of this stuff. And for me, like, what I've seen over the years is, like, this is the time where you kind of get your reward, because it is the toughest point to put on the trade. Nobody wants to. I just see a lot of that in trading, and especially we're in an expiration week. You know, a lot of people don't talk about, they always talk about it after Opex, you know, if market goes down or it goes this way. Really what happens in Opex is there's, as these walls kind of get pushed out of the way, to put it in simple terms, from options expiration, now the market has some place to move. Now volatility can kind of come back in the market. A lot of the times we see reversals around those times. You know, March 2020, great example. March 2020 this year, or sorry,
Yeah.
2023. You know, October expiration week last year. You know, like all of these things, as we see, there's a chance for the market to come up a little higher here. You know, and really, like, you know, all of us are looking at these levels and going like, if we can clear this next level, if we can clear this next level, and that's the best way to look at it, not just kind of going like, oh well, you know, we're out of this bottom, everything's great.
Yeah, I agree. I agree. You got to have your plan. You know, you got to kind of work the plan and plan the work and work the plan. As I like to say, is, you know, it's trading gets a lot easier when you have things to look forward to happening. You know, when you're kind of looking for something to happen. This
Yeah.
way, when you see it, you recognize it. You know, and that kind of thing. So yeah, having the process behind everything you're doing is critical.
Yes. Speaking of which, you know, let's talk about this thin rally in tech. You know, everybody in the world was looking at this thing since the beginning. This can't continue. This isn't going to go on very long. And it was a thin rally. You know, we kind of had the FANG stock take over like it has, but you've been trading for a long time. You've seen a lot of things. Was this very odd that we saw this rally so strong in the tech stocks out of this bottom zone without, you know, much behind it?
AI. Right. I mean, there's a new religion out there, Jason, you know, that this is the kind of thing, this has got, you know, .com bubble makings written all over it. And we're in the early innings,
Yep.
you know, so that's the thing where I'm not willing to really fade this, broadly speaking, right?
Mhm.
I'll take my intraday shots like on a gap day on Nvidia, you know, trade some of that from the short side, but that's generally not the game that I play. You know what I mean? I'm a bull market trader, and I recognize that we are in a bull market now. You know, whether it's less steep than it was a couple of weeks ago, that's fine. I can live with that. You know, that gives
Yeah.
me opportunity. You know, so that's kind of the rally in tech to me now is all predicated, obviously, on AI, Nvidia, the semiconductors leading essentially, and the, you know, really those big tech names that are driving the market,
Yes.
right? Meta, Google, Amazon, Apple, Tesla, Microsoft, Intel, you know, the biggest market cap names have been really driving the tape. And so if that's where money's going to go as rates go higher, then you have to respect that, right?
Mhm.
You know, we literally have had this whole entire AI craze come about with rates kind of ratcheting higher along the way. And
Yes.
you're looking at it and you're saying, holy shit, is the NASDAQ going to hold its gains with rates another 20 bips higher in the tens? And, you know, and all of a sudden, you know, it absolutely does. And in my opinion, that's just because the economy is a little bit stronger than anybody wants to give it credit for. You know,
Yeah.
I feel like half of FinTwit or more, I feel like three-quarters of FinTwit was hell bent on a recession. You know, we're supposed to be in one now.
Yep.
And that really hasn't transpired.
Yep.
You know, so if we're going to have a little bit stronger economy, then we can handle rates a little bit higher and the stock market can bear it.
Yes.
So if we start seeing the data curl over, that's a different story. If rates start moving higher at a much faster pace, that's a different story. But until then, you know, I feel like the tech rally is tradable, sustainable, something I'd like to latch onto at the right price, but it just won't back off right now. It just won't
Yeah.
back off right now. There's that case where we've got a lot of money coming from the sidelines, maybe out of those cozy 4 to 5% yielding money
Mhm.
market instruments, and saying, okay, man, let's do AI from now to the rest of the year and see what happens. So tough trend to fight.
Yeah, I mean, you got so many people right now in these, like, you know, even myself and other people, you know, like it's easy to say, like, even last year, you know, you had tips, you were able to buy these I bonds for, you know, getting a 9 to 10% yield. Like, yeah, I'm gonna go put some money in that, you know, like, of course, but that's gonna come out at some point, you know, and that has to go back in the market. It's going to get deployed. But like you said, I think a great point of what you said earlier was the NASDAQ moving up in the face of rising rates. I think in general, when people see those things happening, they usually go, oh, the NASDAQ's going to crash. For me, what I see when I see those things is something's a little bit stronger than you want to believe, than I want to believe, than anybody wants to believe. And so when we're looking at the NASDAQ and you're going, holy crap, the NASDAQ is holding up here with rising rates, which is just extremely rare. Like it doesn't happen. It has happened, but it doesn't happen much. Most of the time, the environment is bonds are sort of strong. Now you have all these tech things going up, but this is like you said, in the face of a rising rate environment. It's absolutely wild.
Yeah.
I absolutely love it. I think it's amazing, and I think it gives people major opportunities.
It is amazing, Jason, because the best part is that cross current of bulls versus bears that you're going to have.
Mm-hmm.
And if you notice, that's when markets can be in a state of trending,
Mm-hmm.
right? When they're balanced with a lot of bulls and a lot of bears, markets trend.
Yes.
Right. And when everybody becomes bullish, that's when they finally back off. And when everybody gets bearish, that's when they finally start selling off. So, you really need that two-way balance to keep your confidence. Things where the S&P, that last S&P run, call it from 4,300 to 4,600, was for me an easy 300-point move to catch, kind of just playing things from the long side. I won't say that I was long the S&P for 300 points, but I was bullish and, mostly looking for upside possibilities that worked out.
Mm-hmm.
And it was only able to do that because there were tons of bears along the way.
Yes.
Right. There were so many terminal bears that were like, oh, this thing is going to curl over again, blah, blah, blah. And you're like, okay, good. That's exactly what I need to hear. I think it's going up.
Yep.
And that's where you can just stick to your own conviction, watch everybody else on the court and watch their game and say, well, I'm sticking to my game. I love that half of you are bullish. I love that the other half are bearish. And that means I can stay right down the middle.
Yep.
And so it's only when you start to see everybody have groupthink that you start to say, wait a minute, I'm not the only one that's bullish here. I should probably lighten up. It seems
Yep.
like general consensus. So
Mm-hmm.
that's a little bit of how it works too, I think,
No, I agree, and I love that you mentioned that that's a way that markets trend, and
Yeah.
it's true. At that point, that's when the big trends happen. I think a great example, I've talked about it before, when the initial tech rally started, and I started to get, I'm very systematic. I'm starting to get buy signals in tech. I'm starting to buy tech. Every single person that's much smarter than me as an analyst is saying how dumb it is to buy tech right now.
Yeah.
And I'm like, well, I just have my signal, and I'm owning it. I got people that are good friends of mine, smart people. Hey, this is going to get cut by 50% at some point soon. Hey, this the whole time, like literally the whole time. And like for me, I'm just such a price action trader that I'm like, well, I can't predict that. I can't tell you when it's going to end by looking at something, but I can tell you when it starts to curl over and I get sell signals that I'm going to sell then. And either way, I know I have a stop loss. So, if I get it's never going to hit me for 50%. Could have a bad gap day, but it's never going to be 50% most likely. And in futures, it really isn't much of a gap. So, you have these things that are like telltale signs of sitting in your conviction, holding these trades, watching them run, and just moving up your stops and kind of letting it go until you're starting to see, like, even when this thing started to peak out, we finally started to get some sort of consensus that this could go higher. Finally, after all this time, they're starting to move to the bull side. And what's funny is, even when you look at it, it's not like the COT reports, it's not that bullish yet. Like people are
No,
not
you're right.
bullish
I
yet.
agree.
Yeah.
I still feel that there's quite a balance to the markets, even though, you're winning over some bulls just basis price action, right? The thing goes up 300 points in over a couple of weeks. You're definitely going to lure in bulls. People are going to get bet along or starting to get giddy because they're making money. And, you have the fear greed index tilt way towards greed.
Yep.
And that's when you're starting to look for your VIX spikes and your waterfall playbook type of thing,
Yep.
and that's when you have to make sure that you're letting stock out, regardless of how hard it is. And so that's just, everything is just reading that, right? Like that's the whole securities market. And if you understand that and stay within that game, then I feel like you stop getting derailed by economic reports, right? And economic data. It's like I feel like quite honestly, I mean, the market does react to data like that, and you need to understand what's going on. But I could trade perfectly well all day, every day. If I could probably go an entire year without even acknowledging a piece of economic data.
Yes.
Markets do what markets are going to do, right? With they're the same formula in a different ticker over and over and over again.
Yes.
So that's kind of how I try not to get caught up in, the securities are not the economy. The stock market is not the economy. And that's like the most important rule to understand.
Yes. No, I agree. And, we were just talking about that the other day, which was, just the simple fact of look back at last year in October, you had that massive reversal day all the way back there, which was the bottom in the market. That was on a bad CPI report. The CPI, which has basically been dragging the market down all this time. And then now we have a report that comes out that also says inflation was higher, but the market ends up bottoming and having a great reversal day right there. That's what I look at for data. I don't really want to care too much about what's going on or what everybody thinks or predicting data. Like just stay away from that shit. Like, you don't know how the market's going to react to it. Like that's the bigger thing. You just never know. The market could react bullish to it or bearish to it. It's up to you. But how you read that after the fact is going to tell you a lot more than trying to predict it in the moment.
Couldn't agree more. That's a great observation. Great way of putting it.
Thanks, Tony. So next one was you're seeing this pullback, and you've kind of noticed that you're thinking this is kind of just a normal pullback in the markets, like it's August and so on, like it's kind of a normal pullback. It's what I'm kind of seeing too. Why do you think it's a normal pullback in your eyes? Like, what do you see? Because you look at a little bit more than I do.
Well, I feel like this, well, put it this way. You can start by saying there's always a bull market somewhere, right?
Yep.
And you can look at this year's year-to-date performance and see that semiconductors are up 50% on the year.
Yeah.
Home builders are up 40% on the year. The NASDAQ is up 35%. Software is up 35%. Cloud storage, internet, and social media are up between 20 and 30%. Those are bull markets, man. You know what I mean? Like, I don't know how to call those anything other than those sectors are trading well. Now, of course, there's a couple of sectors that'll balance that out on the downside, but it's cannabis, solar stocks, utility, and things like that are down on the year. And
very
then
small parts of the S&P too.
Yeah, really small parts of the S&P. And then within that story, we've just had the entire natural resources tape, and I'm talking about energy, not the entire resources tape because gold miners backed off, and so industrial miners have been heavy, but the whole oil portion of the S&P, exploration, production, and stuff like that just went from down 12, 15% on the year to flat. Right. So within that, rotation where tech backed off the highs, we got to remember that energy rallied 10%.
Yes.
And so when I look around, I feel like there's places to be bullish. There's sectors that I want to play from the long side, and so if that's the case, how about just the fact that technology is rallying while rates are rising?
Yeah. Simple.
You know what I mean? I don't look at that as something where I'm going to say, okay, let's get ready to sell technology. I'm looking at that saying, holy smokes, look at the technology train going. Can I get on that thing?
Yeah.
So when there's moves going on like that in the market, like I can't get bearish. I can't meaning all that means for me is saying that I want to play things from the long side.
Yes.
Right. Or me getting bearish means, okay, I'll get flat. I'm a bull market trader. I used to think I was a smart guy and have a great long short book and super trader, portfolio. And then I decided that I like making money better. Quite honestly. So I thought that making money is a lot cooler than having a long short book and thinking you're really smart.
Mm-hmm. Yes, that's absolutely true, and that's hilarious because I always have those conversations with people. you know, when I first got in the industry, the first people I worked for, they were all about shorting everything, you know, short everything, got to short everything. You know, and it wasn't because it made money, it was because people gravitate to that. They will gravitate more to me saying something like, hey, the Nasdaq could go up a lot more here, we'll probably at all-time highs. Nobody gives a shit. But if I
Right.
said something like, hey, the Nasdaq here, it's going to crash to, I don't know, zero, you know, like it's going to go down 50% or some big number, you know, people be
Yeah.
like, oh my God, you know, it sells newsletters, everybody would come in. But really, if you just simply put it, the market goes up more than it goes down most of the time, you know. And if you're going to buy something like the S&P 500, like you're going to buy something like the Qs and so on, you're going to most likely make more money on the long side than the short side, no matter what happens, whether there's COVID, whether there's anything you want to dream of, just because of the way the indexes are built. You will probably make more money on the long side. So I always try to do the same thing where I'm like, okay, well, sometimes I will have shorts, you know, but at most of the time not. But also in equities, I really try to stay away from the shorts because I know they're violent bounces. And just like you're looking for your playbook, you couldn't do that in a commodity. Like we can't in a commodity, and you might know more than
No.
me, but back testing it for me has always shown me in a commodity, if I start to buy or sell it on, or sorry, buy it on 4 days down, like we're talking about in the S&P, I will lose money
Different ball
90% of the
game.
time. Yeah.
Yeah, different ball game.
Yep, I will lose money 90% of the time. But in the S&P 500, you know, and I showed that in a back test the other day, like back test the S&P 500, you make money 74% of the time. But if you do that same trade in oil, you lose money almost every time. It was like something insane, like 82% of the time it lost money. Like
Yeah.
that's crazy. So yeah, no,
You have to know what sport you're playing. That's
yeah.
for sure. You know, in the commodity markets, we don't have all those neat barometers like, you know, like a VIX and a TIX index and a put call ratio and a fear and greed index and, you know, DMARC, you know, well, excuse me, DMARC goes on anything, but I'm
Yeah.
saying, you know, these are the very specific stock market indicators that, you know, fill out the picture and allow you to place your bets accordingly.
Yes.
You know, if there was a lot more data, and that's why I kind of cling to crude oil and commodities like that, because they're extremely transparent.
Mm-hmm.
You know, the futures markets are extremely transparent and give you all the barometers, all the speedometers that you need to trade the thing. So that's really useful to me as well. But yeah, they're different animals entirely.
Yeah. No, I love that. It's you know, they're so different and they trade so differently, but you can still get so much, like just something like oil is, and like you said, it's a transparent market, and commodities, like they really move sometimes, you know, because they're not sitting there. There's not a news flow all day long. There's not all types of crazy stuff most of the time. It's really fundamental supply demand based. And so you'll see these trends and they really extend one way or the other, you know, so you can make a lot of money on the long side and the short side. But, you know, equities, like we're talking about, long side's going to win most of the time.
I like to look at the S&P chart since I was born every once in a while, Jason. You know what I mean?
Yeah.
And since I was in high school and since I got my first job, and always tease myself and say, man, you know, if you were into this and somebody was telling you, put that extra money in the stock market, put that extra money, you know, in some more aggressive things when, you know, like the stock market when you're, you know, 20, 25, 30, man, that would have worked out nicely, you know, and that's how I try to train, you know, my kids and things like that, you know,
Yeah.
it's important. Not only is it important not to go into debt when you're young, but it's
Yes.
also important to save and perhaps more important to invest.
Yes.
You know, it's very difficult, but that's how I kind of think that the when you're young, the priority list should go, you know, number one, avoid debt, and then number two, make sure you invest, and then number three, make sure you save.
Yes.
You know, because it just turns out that, you know, money over time, you have a better chance of compounding that gains over a longer period of time.
Mm-hmm.
You know,
Yeah.
so that's why I always suggest for young kids that, you know, keep in mind to stay out of debt and make sure you're saving money, but more importantly, make sure you're investing money as well.
Yeah. It grows, you know, and speaking about another long-term investment you're also bullish on for, you know, life, similar to me, is gold, you know. So thinking about gold as a, let's say it doesn't look that exciting, especially since Bitcoin came out. Gold doesn't look that exciting to kids. Like you're 20 years old, you're like, man, I'm going to buy gold and have this rock sit in my safe for 50 years. That sounds stupid.
Yeah.
Why are you so bullish on gold over the long run? I'm not saying it sounds stupid to me. It sounds great to me, but for a
Yeah,
20-year-old, it sounds dumb.
yeah, exactly. And I'll be honest with you, Jason, I'm not bullish the gold. I'm not insanely bullish the gold price. Like, I'm not a gold bug. I've never been a gold bug. I've
No.
never bought into that. Like, you got to own miners and juniors and, everything. Like, I was early to buying physical metal because I worked on an exchange, and there was always a guy that came around selling coins on the floor, believe it or not.
Yeah.
And you literally would buy, $5 silver coins and a couple of $280 gold coins just to get the guy to go away. So that's where you kind of got your first leg up on, understanding what it means to own physical. But I honestly own physical gold, and really I use gold mostly as a vehicle for, kind of storing money and kind of putting money away for long periods of time in a safe place.
Yeah.
Just because I'm not bullish gold, but I'm bullish gold's ability to hold its value versus other things over long periods of time.
Yes.
Right. It's different than being bullish in price.
Yes.
So I feel like that's important. Gold is like my monetary insurance policy, right? The freaking my world blows up. It's like, okay, I have another currency here in my safe that maybe didn't blow up and will go up in value if all the dollars that I'm getting killed on get slaughtered, and it's never going to be enough to live through a devaluation or anything like that. But it's a little bit of something that you can kind of sleep a little bit better at night with.
No, I love that. And that's the same for me. It's not a thing where I'm like, you gotta, buy miners and gold's gonna go up forever and it's gonna outperform everything. It's just an insurance policy. It's something that, and also I think it's also nice if you're younger, if you're in your 20s and you buy something like gold or silver or something. It's not that, yes, you can exchange it pretty easily, but you have to also think about it, then go to the store, exchange it, and so on, or sell it, however you're going to do it. So it just kind of keeps it out of your hands. Whereas a savings account, that's never going to happen. You can just transfer it over. It's the end of the day. But gold, you can't just touch it easily. And it diversifies your assets. Like the biggest key to holding wealth, because, even making wealth, holding wealth is even harder than making it sometimes. So if you're looking at holding your wealth, like, you have to start diversifying. And like, if you just have these things like stocks, you have a little bit of gold, you have some savings, you have some bonds, whatever you do, like, the more diversified you are, the safer you are in all different calamities. So I love gold for that, the diversification. I love it for the insurance policy. That's the reasons why I like it as well.
And if it goes on a bull run, we can trade it from the long side too.
Absolutely.
Right.
And it does.
Yeah. It moves. I mean, I think the thing that's kept me from hurting myself in gold is that I do get bearish and I don't mind trading gold from the short side.
Yes.
Like gold and oil are two commodities that I'm very, very limber with. And, I may have a view of being bullish, and I may also know that that commodity just broke a trend line or a moving average isn't about to go down.
Yes.
So I can get my head around those things as well. So I think there's a lot of opportunities in commodities that way, where stocks, shorting things is just a much higher degree of difficulty.
Yes. No, and that's so important, because commodities, you really have to be nimble. You always have to be willing to go either way, because you never really know. Your trend models will tell you, like these things, if you just build a simple model, like, they'll really tell you when it's in a downtrend, or even simply to stay cautious. Like, you don't always have to be long or short, but staying cautious is also a great thing. So no, that was a great point.
Right on, man.
So now that we're into the commodities space, that's the highlight for me to talk with you about the commodities stuff. Energy for me has like, I think this was in July now, we started to see energy start to show some relative strength. It was losing the battle for a long time, and then all of a sudden energy started to step up. Now in this drawdown that we've had in the last 3-4 weeks, now energy's the only thing that's been holding up really well in comparison to everything else. So what are you seeing in energy now? Are you seeing the same thing? Like, I'm kind of looking at a possible rotation coming into the later half of the year, seeing that energy starting to pick up and so on, or do you just think it's kind of something that's happening in the summer or whatever? What are you thinking, Tony?
I'm on the fence there, Jason. We made a little money being a little bit long just because oil was doing some things technically that it hadn't done in a while.
Mm-hmm.
It was in the middle of that battle that you mentioned where it was in that range from what, like 67 to 75 for a
Yep.
long time. And, you were like, man, oil really likes these prices down here.
Mm-hmm.
It was kind of gravitating either side of like $72.
Yep.
During that time, the battle in my head was really the SPR seller, right? The Biden administration versus the OPEC buyer, right? Who was wanting to cut output, right? And it seems like we got to a point where the SPR sales petered out, the output cuts kind of got the upper hand, and we had a couple of pretty steep inventory draws with really good gas demand.
Yes.
Right. So we had these inventory draws into good gas demand for the summer, which tightened the spreads up for the summer. So everything went kind of held the flat line there before going into contango on the oil dip when it was kind of sitting on its lows. And then into summertime with great gas demand, really globally, aside from US gas demand, we got the spreads to tighten up and we got an oil market to resolve out of that. This time it was gasoline led. The last rally in energy that we saw was all diesel fuel led. And now I think that gasoline still is vulnerable to the upside with low inventories, great demand globally. Crack spreads have gone bid from, around $30 to around $40. So the refiners are on the run now.
Yep.
There's a lot to be bullish about there. I need to see it prove to me that it's sustainable through the fall.
Yeah.
We're coming to the end of summer now that, you can make an easy excuse for gas spreads to loosen up, for the crack spreads to back off. If that happens, you look over at the oil stocks and you're like, damn, we're back at the highs again and failing.
Yes.
Right. So you're going to have to remember to make sales unless we get a breakout.
Mm-hmm.
So we're at this kind of tenuous spot to me in the oil market where it's bounced off the lows really well. It's holding the dip on the pullback here to around 78 so far.
Mm-hmm.
I need to see it get through the range top around 82, 83 for it to be good for the end of the year. If not, we might just see, that oil tight, the gasoline tightness, as we head into refinery maintenance season in the fall. That gasoline tightness might have just been a flash in the pan.
Yeah.
And if product spreads all kind of sag back, then then the whole complex is going to just fall back into the, mid to low 70s again. So it's got a lot of potential, I think. And I still think the stocks are really, really attractive. A lot of them, Marathon Petroleum just went on like a 20% run to a new all-time high.
Yeah.
And so I'm just saying, like, those stocks, like Exxon, Conoco broke out and ran. Oxy, which is Buffett is buying, is holding up really well. There's some really bullish stories in oil services if you listen to those conference calls. So there's a lot of bullish energy vibes out there. Let's leave it at that, So that's somewhere where I kind of have the pressure on myself that I have to be. If there's a bull market in energy, that's the one that I have to be the first one into. And so far, so good. I mean, I'm in them. They're in the positive. The trades are in positive territory, and we're kind of waiting to see what happens next.
Yeah, no, that's great stuff. I hope everybody goes back, and I'm gonna have to go back and unpack some of that too, because that was a lot. There's a lot of great stuff in there. And looking at this over the last 3 months, we're seeing energies like the leading sector out of the spiders. We're seeing all this kind of coming together, and really, like, if you just zoom out on a chart of XLE, I mean, look at that thing holding itself up all this time. Like, never hit a 52-week low. Whatever happened, it held itself up during some of the worst trading times in the last few years. That in itself tells you a lot. The stories that you also said, and the narratives you also just brought up, like, that also is important. So we're kind of looking at this global thing that people are going, oh my God, there's a recession. Oh my God, it's this. Whereas supply and demand looks very favorable to oil and gasoline at the moment. We're seeing that. We're seeing the price start to break levels. We're seeing also, when the price starts to come down heavily, even like last night, I think I looked at some point, my oil position was down 2% overnight at some point last night. Then today, now we're almost back to flat. Like it's like,
Yeah, she's clawing her way. She just, what in my opinion, I just see, oil went on a straight line run to the top of the range at 83 and tried a couple of times and failed. And then on the downside, it just broke that steepest trend line that it rode to 83.
Yep.
So now we'll probably pull back, kind of 50% of the way, which is, somewhere like 77, 78. I wouldn't be shocked if it held here, or maybe a little bit lower and gets back on its horse if that tightness persists.
Yes.
In the markets, so it's that really critical time to be watching inventory data and what happens. So we'll see how it plays out. But, it's one of those trades that's like, it's a kiss your sister trade right now. You've got it on, it's in the money, it's not going anywhere. It could fall right back to a scratch where you wanting to be out.
Yep.
So that it's not a trade to kind of be beating our chest about just yet.
No, I love that. And it's that's, to me, that's the biggest thing in trading. And I think the thing that people newer to trading don't talk about enough, which is once a trade's moving and it's into profit, great. For me, I'm like, great. I'm playing with house money now. Let it run, keep my stop loose, wait for an actual sell signal, call it a day. Whereas, most people are like, oh my God, I might lose profits. Oh my God, I might lose profits. You just never know how far something like that can run. I mean, oil's been consolidating or energy has been consolidating for a really long time. If you're looking at the XLE and it's starting to break out and it's giving you some price signals, it's like you don't know where that's going to end up. There's no reason why it can't run another 50% easily. There's no reason why it can't run 100. You just never know.
No, oil's definitely vulnerable to the upside, no matter what.
Yes.
The vulnerable side is to the upside is that it spikes $20 and not that it falls $20.
Mm-hmm.
So that's why I still think, you still have a little bit extra juice in that upside probability. So we'll see what happens. We'll see how it plays out.
Yeah, and that's the thing, we're looking at too, and what I'm kind of looking at a lot now is that amount of pressure that this is going to put on just stocks in general. I think that's the reason why, a lot of people saw we had this situation, we were going to go into inflationary crash forever. It came back a little bit, gave some back. Not that it's anywhere near normal. People are like, inflation's dead. It's nowhere near normal. Go out in the real world, it's not anywhere near normal. And so, when we're looking at that and going, okay, how much can something like oil really go up and put pressure on the market, whereas the market's going to continue to hang on there, so that's something that I'm looking at right now. I guess, what's your opinion on that? Do you think this would put a lot of pressure on the market at the moment?
No, I don't think that rising oil price will put pressure on the market. I mean, I'm kind of still in the same way where I'm kind of waiting for the next shoe to drop. Mm-hmm. Nothing has changed. Yeah. I went through the oil trade, right? We tightened up gas spreads over the summer, price rallied. Now I'm waiting to see what's next. If they can pick up and rally, if oil can break above the 83, then it'll be really interesting into the end of the year. And if not, like I said, it's just going to be a dud.
Perfect. All right, Tony. Well, thanks for your time, man. Really appreciate you coming on and going through this. It's always so enlightening for me to just chat with you about this stuff because, you have a very similar mindset to how I think about markets and you're so refined at it. I love talking to you about it. So thanks for coming on, dude.
Anytime, Jason. I appreciate you having me. Give me a platform to talk about markets, man. It's been a lot of fun.
All right, man. I'll talk to you soon. Thanks, Tony.
Sure.